What is up, everybody? Welcome back to Bitcoin and Markets. My name is Ansel Lindner. Happy Friday. We made it. We made it through the week to the weekend, but we're not looking forward to what's coming this weekend. News is breaking in Bitcoin that the whale that dumped 24,000 Bitcoins last weekend, Sunday, on a very illiquid time, is probably going to do the same thing this weekend. Another 24,000 from that same address or group of addresses, an associated address, are moving to exchanges. So we're going to take a look at price. We're going to talk about that and why I'm not worried about it. And you shouldn't be either. So, all right, guys, I am streaming on YouTube, Rumble. Sorry, not Rumble, YouTube and Telegram. Telegram is where my main community is. So check that out. Should be down in the links down below. Also, I am doing daily morning spaces on X with bitcointreasuries.net. So if you go to BTC Treasuries account, you follow them and join us for spaces. We're getting guests on. Today we had a CEO and a head of Bitcoin strategy from H100, that new Bitcoin treasury company out of Sweden, and they're really stacking fast. And so we had an hour sit down with them. It's open to the audience. If you want to come up on the mic and ask your questions, you're more than welcome to do that. So join me. Usually it's 9 a.m., but we will flex for guests. And if you know other guests that you would like to come onto the space, you guys can always reach out to them and say, hey, have you seen bitcointreasury.net spaces? They're every morning at 9. You should get in there and talk about your company or whatever. So, all right. And it's open to, we had a guy ask a question, I think yesterday, and he was just a relatively small player, but he was thinking about launching a Bitcoin treasury company or a Bitcoin treasury strategy with his company. And so he got on and he asked a few questions and gave some insight to how to do IPOs and stuff like that. So if you are a small business owner or you're looking to launch some sort of treasury company, come on in and discuss that with us. So, all right, let's share the screen, get into this price. Should have this pulled up. I was going to do a reaction, actually. So the reaction to Balaji was requested by one of my Telegram community members, and I will get to it, but I do not have time to get to that full reaction today, and I don't want to shortchange it. So sometime that I have 90 minutes to stream, sit down, and we'll go through that whole reaction. I am most likely, I haven't listened to it yet, but I'm guessing I'm going to be very opposed to what he says. Okay, let's get into price. Share the screen. Share the screen. This is the Bitcoin price. You can see that big daily candle dumpage here on the day. I'm going to share a different screen here with you guys on Telegram so you can see a little better. That should do it. All right. So yeah, this is the Bitcoin chart. You can see down on the day, negative 4% on the day, mostly on fear. This last dump, we handled it very well. And I mean, we're seeing 50,000 Bitcoins. That's almost $5 billion, right? Or almost $6 billion worth of Bitcoin getting dumped. And Bitcoin is only down like maybe 7%. Let's see. Where is it down from this candle? Partway through. Yeah, it's down 6%. And they dumped $6 billion worth of Bitcoin onto the market. I mean, I guess they haven't done it yet this time, but we see it coming. So maybe we get down to 10%. But Bitcoin is used to 25% sell-offs and stuff. Now, obviously even more than that, 40%. Even during bull markets, we can see huge retracements. So what was I going to say about... Oh, if you guys have been watching my content for a while, then you know that recently I've been very frustrated with the price. It's been something that, back here when the ETF launched, I was also very frustrated with the price because the ETF launched, all of these billions were coming into Bitcoin. and Bitcoin sold off and came down here. And this was my frustration zone. I was like, how can all these billions be coming in and Bitcoin is actually not doing anything, not going up? Of course, it took a little while, but eventually it started to go up. I've been frustrated here this year. Mainly, let's see, mainly in this area because, we had such bullish fundamentals, but we weren't much above where we were back in December. And so the price was not following the fundamentals. That's the key distinction. Now I'm less frustrated right now, even though we're having a dip, because it's logical. Because it's logical. If you have this massive amount of Bitcoin being dumped onto the market, it's logical that price is going to go down. And so I'm feeling a lot better about it. And of course, getting to the end of the day on Friday, you start getting a ton of notifications coming through. I'm going to have to mute Slack. Hold on one second. Or I'm just going to mute. Oh, the site is muted. What the heck? All right. There we go. Back to the charts. So let's take a look around the rest of the markets. If you guys are new to my content, which most of you probably aren't, I've been in my general macro thesis is that we're at the end of a 75-year credit bubble. Golly, can I talk? We are at the end of a 75-year credit bubble, and you can't run away from a credit collapse. Okay, you can't run away from a popping of a bubble. And so we've had this global bubble, and they're going to keep trying to kick the can. They're going to do it. They're going to bail out. They're going to spend money, do fiscal spending. They're going to go down to zero interest rates and all this, but they're never going to get a full-blown recovery. And one thing also, I was watching Jeff Schneider's channel on YouTube is Eurodollar University. And one of his recent videos was talking about the slowdown in France. And he showed the GDP for France and the GDP for Germany. And you can just tell that they cannot grow. He calls it forgot how to grow. I call it the end of a 75-year credit bubble that you cannot get out of. Okay, you can't get out of a debt problem by adding more debt, especially at the end of it. You could at the beginning because that debt is productive. But with diminishing marginal returns on debt, as you get to the end of it, end of this big bubble, you're adding more debt and you're just adding more debt burden and your economy cannot move. And so that's what's happening around the world. So my macro thesis is based on that. Plus you throw in demographics and that's an important piece as well. But so what will happen is people will move away from credit-based, credit-denominated things, credit-based money, and go into more sound money, into Bitcoin. It's almost like a de-evolution of money back to a sound backing. But in this era, the dollar will go up because credit will struggle. Credit will rise, but it won't be productive and all of that. So it will just be used to pay off old debt. And so we should see the dollar actually appreciate relative to other currencies. We'll see gold going up. We'll see stocks going up because opportunity to employ that money in the broader economy is lower. And so people, when they get their paycheck, they're going to save as much as possible. They're going to tighten their belt and save as much as possible. And so stocks will go up. We'll also see an overperformance of the top stocks because of passive investing. If you're putting more into your 401k or into your retirement plans and they have index funds, those disproportionately go towards the higher market cap companies. And so they get a bigger boost from all that passive buying. So specifically stocks will go up, but particularly those large cap stocks will go up. What else? Interest rates should go down as people flee to safety in general. There is this interest rate fallacy that let me go to the 10-year and I'll just show you. Actually, let's go to the 3-month. This is the one I've been watching closely. and see how it's just dipping here. So as as you approach or as you deteriorate, your economy deteriorates, people will naturally start picking more defensive investments. These are safe and liquid assets, and U.S. Treasury, U.S. Treasuries in general, but bills specifically, the shorter end, they are the most pristine of that safe and liquid asset. I mean, of course, you can say Bitcoin now. You can say gold fits that role to a degree, not as well as Bitcoin. Um, but treasuries definitely, especially up here at over 4%, it's kind of a no-brainer. If you can get to safety and still get 4%, that's pretty easy decision to make. So yields should start going down. And oil is the last piece to talk about in this whole macro thesis. Oil should tend to be weak. You can see this big arrow down here. Oil should tend to be weak because, one, demographics, there's fewer people to demand oil. All right. And when there's fewer people, there's less economic activity. There's going to be less need for trucks. There's going to be less need for transportation. There's going to be less need for trade in general. And so the use of oil and even natural gas and distillates and other things, there's no problem with supply. There's no problem with supply in the world. I mean, Venezuela, they could quadruple their output if they actually wanted to, if they actually opened up and let Western companies come in and gave them guarantees and all this stuff. But Venezuela could quadruple their output. Saudi Arabia still has a ton of excess capacity. So does Russia. The United States keeps adding. We looked at those output numbers the other day, and they just keep going up seemingly every month, even though the peak oil people say, oh, it's peak oil. No, there's plenty of oil. We have more oil in the ground today than we did when we first started using oil, because the proven reserves continue to increase in the world. I mean, there might be maybe a 5-year stretch where proven reserves actually decrease slightly, but that'll be made up for in the next 5-year chunk. So overall, proven reserves, that means oil that's in the ground that we know of continues to go up every single year. And the ability and the break evens, the ability to get the oil out of the ground increases, and the break evens to get it out of the ground decreases. And so over the long run here, I'm talking 20 to 50 years down the road, oil should remain weak. That is all. We are not in any danger of runaway oil prices. The only reason why oil prices spiked back in 2022 was bouncing off of COVID, and then the build up to the Russo-Ukraine war. That's the only reason. And maybe supply chain concerns and things like that. But overall, this was very, very temporary. And I called it back then. I was like, no, it's going to come back down. And so we saw over the next few years, the whole time I'm saying it's going to tend to be weak. It's going to tend to be weak. And fighting back against all of these peak oil people and linear thinkers that think, oh no, the price of oil is going to go up and it's going to crush the economy and cause all this inflation. I'm like, no. This also fits with the overall idea that we're not going into an inflationary period. So the end of a credit bubble is not inflationary. The end of a credit bubble is deflationary. So, okay. And Bitcoin fits into that because there's no counterparty risk. And like I said, it's going back to sound money. And that's what people will want when they realize the entire system is malfunctioning. And everybody knows it. Okay. Everyone knows the system is malfunctioning. The BRICS know it. I'm sure the economists at the Fed know it. The economists at the ECB, everybody knows that the credit-based system isn't working, and it's coming towards an end. And how do we transition out of this? Well, how about maybe just naturally the human animals that we are they think, oh, there's some instinct to add Bitcoin to your balance sheet. There's some like group or herd mind, hive mind, that's telling people you need to get hard assets on your balance sheet. You need to get Bitcoin on your balance sheet. And that's one reason why we see this extreme boom in treasury companies. Of course, that's not a direct answer. The direct answer would be people are greedy and they want to launch treasury companies and pump their stock. Okay. But underneath that, it doesn't matter what your rationalization is. That's a post hoc rationalization for your instinctive actions. And I think that most of our behavior, probably 99% of our behavior, is post hoc rationalization of more instinctual stuff that we do. And I try to flesh that out in other talks. So let me see if there's anybody in the chat. 9 people are watching, guys. Make some comments. I'll address them. Again, it's going to be a little bit shorter stream. This was the Balaji video. Let me find it. This one right here, the Balaji video when he was on Peter McCormick. I was going to react to this, but I want to do it justice, and I don't have time to get into it today. So we are going to push that off to a later date. It might be a Telegram exclusive. I don't know, because my guys over there on Telegram, we can hang out and just relax, maybe do that on a weekend or something like that. All right, let me see Telegram if there's any comments. No. Okay. So that's about all I have. Let me see. Let's go see if there's any news out. One thing I've been doing is just going through my likes. Oh, this is another one, British Hodl. I met him on a space last Friday. Spag. Awesome stream this morning also. Oh, you caught that? Oh, let me talk about the stream this morning. Let me talk about that. This is just a small group of friends, isn't it? Okay. Yeah, so it was Sander and Brian from H100, and it was my first time interviewing execs, and I'm trying to push them in, like, we talk about their company, and that's interesting, and trying to go back and forth. And we had a guy come up to ask a question. He sounded like maybe he was from India or something, and he was trying to talk about Bitcoin versus crypto, and I had to stop him and say, "Hey man, do you have a question for the guests?" And he said no. I said, "All right, well, I'm gonna push you down, and then we need to engage with the guests." Yeah, the shitcoiner came up. But then we had a couple other people come up, I think, or at least one other guy, and had a good, 2 other guys, and had some good comments from the audience. So we really appreciate that. And it was overall good. Anyway, then I was pushing them to talk about what's going on in Europe. I mean, come on, guys. What is going on over there? France now is going to need a loan from the IMF? What the heck? That's crazy. And like I said about Jeff Schneider showing the French GDP just stagnant, the German GDP stagnant. You have all of this crazy stuff happening in the UK with the Scottish girl with the knife and stuff. I mean, what is going on? And so I know I didn't want to get too political with them, but I asked them, what is the overall macro situation over there? What do you think about macro and about recession and about this IMF thing from France and yada, 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 trying to get them to comment about the state of Europe from very well connected, very well plugged in people. And they wouldn't touch it. They said, we want to stay on our stock, which is understandable, but I was disappointed. I really wanted to pick their brain about that. But yeah, check out that recording. Oh, thanks, Larry. Okay, let me see if there's any comments from YouTube. Nope. All right. So yeah, I'm going to check this out. I haven't watched this, but this is another one I should watch and react to. When we had British Hodl on last Friday, we aligned in so many things, and I wasn't expecting that. We got into more macro, and I don't think he covers a ton of macro stuff. He's really focused on Bitcoin in his own content. And so it was fun to explore some of those macro ideas with him. I'll be watching this later. All right. So lawyers from the Federal Reserve, for the Federal Reserve, Governor Lisa Cook will be in federal court today and try to save her job. President Trump is trying to remove her for cause. Now, Trump also came back and filed a motion or whatever it's called in the case today. And it said, hey, look, it is in the law that we can fire her for cause. And this is beyond judicial review, which it is. Okay. The courts have no say here. They're probably going to get a temporary restraining order for this. But if Trump doesn't have the authority, why would they need a temporary restraining order? Anyway, I think Lisa Cook, I think she's gone. She's absolutely gone. And it really doesn't make any difference. She's more on the dovish side. This video says she's more on the dovish side. So it's not going to really make any difference for monetary policy, but it is flexing muscle. Okay. It's saying, hey, we're in charge. It's showing independence of the Fed is getting chipped away at. And if you guys have watched my content, there's three main groups. That's one thing I'm going to disagree with on Balaji. So, and Balaji on this podcast, he's talking about these four factions: blue, red, China, and the internet. That's kind of silly. But the real factions are the global Marxists, the bankers, and the people. And the global Marxists and the bankers have ran things for so long, and the people are stepping up. And that's what this populist wave is around the world. And that's what Trump signifies, a populist wave. And so it's obvious that in this situation, Trump is going to take on, the people are going to take on the Marxist globalists and the bankers. And what do you see? They're redistricting. They're going after some political opponents. They're going after DEI. They're going at the heart of the Democrats and the global Marxists in the United States. And now they're also going after the bankers. So this is super, super obvious that this was going to happen. And we'll see if he's successful. I think he's going to be much more successful in this term than he was in the last term. He already has been. He already has been way more successful in this term than the last term. And in the last term, I don't vote typically, because I think if you vote, then you don't have any reason to complain because you buy into the system. But I didn't vote for him in 16 or here in 24. But when he came in, I was hoping that he could do good and that he would at least take on the media. That's what I really wanted him to take on, because I didn't think he could go after the deep state. But if you get the media and you clean up the media, and the media becomes on the side of the people again, then the media and the people can take on the deep state, right? So I was hoping that he would clean up the media, but he failed doing that. I mean, you'd have to, I don't know exactly even how you would do that. Take away some of their government funding, which he's trying to do, things like that. But I think he's going to be much more successful this term. Okay, let's keep going. Okay, Bitwise predicts Bitcoin will reach 1.3 million by 2035 with 28% annualized returns. Okay, well, that doesn't matter because right now we're dipping. 107.7 right now. 107.7. Where are we going to stop? Let's look at this from a 15-minute chart and see just how it's moving down. I mean, look at that. Just boom, 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 boom. What is this? Very oversold on the RSI. And this is a major divergence on the 15-minute. What about on the 1 hour? Yeah, we're getting divergences all over the place on the 1 hour. So when I talk about divergences, I'm talking about higher low on the RSI, but a lower low on price. And if you turn this on, yeah, you can see the green bars are the bullish divergences and the red bars are the bearish divergences. And we're starting to stack them up here. I would even put it back to here. So like start it right here. That's a pretty steep sell-off with higher lows on the RSI. And that's on the hourly chart. So I think that's pretty significant, even though the hourly chart's not the best. How about 4 hour? We got some divergences here. We're going to stack them up on this as we turn around, if and when we turn around. But we're not even at oversold yet. So we haven't been at oversold on the 4 hour since the 19th. Never cracked overbought. But we're coming back down into oversold territory on the 4 hour. The daily, we don't have any divergences here. Bullish divergences probably won't form any for another week. And in that time, with this dump over the weekend, we could get to oversold on the daily. That would be, if you're to be watching for one thing, I would say that's the thing to watch for, is oversold on the daily, and then wait like 24 hours, and that would be a really good buying opportunity. Usually when you have oversold on the daily, that's a good buying opportunity, a trading opportunity. And hopefully it lines up with a bullish divergence as well. So, okay, that's that. And how about the weekly? What does it look like on the weekly? This isn't looking so hot on the weekly. So overall, I would say this whale dumping is turning it very, very bearish. But I think it's psychologically easier to handle for the market. If I am a proxy of the market, if I'm a proxy for the market, I was very frustrated with price. Okay, now that we are seeing the dumping and price is moving down, now I'm not frustrated. I'm just waiting. I'm just waiting to see where the bottom is going to be and when can I buy. And I talked about that on the post that I just put out today over on the website. Title is Whale Wars and Fed Shakeup. That's for the premium guys over there. But I talk about what level I think it's going to bottom at, where we're going to get in this dip, and where the opportunity lies in that respect. So check out bitcoinandmarkets.com. Okay, back to the chart. Let me see if there's any comments. Dex Invictus back with us. The Bear Whale 2025 version. Yes, it is. Did you see the thumbnail that I put? I had some Bitcoiners on a boat fighting the whale. Yeah, it does feel like the bear whale. I think, did he dump 30,000 coins? I think it was 30,000. And he didn't dump them. He had a limit order in at what price was it at? Was that 300? 30,000 at 300? Is that the case? And when people just chewed through it. Oh yeah, I remember that. I was watching it. Happen. Crazy. This is bigger. This is bigger than the bear whale, and much bigger if you talk about dollar value. Some of the people like Checkmatey and others, they've been putting out some good visuals of just how much Bitcoin has been sold, and they do that by tracking UTXOs, which isn't an exact science, because if you update your wallets and you move Bitcoin around, it's going to reset the clock on all those UTXOs, right? They might have a way to kind of filter those, but overall, I would say it's not an exact science. But he was looking at different cycles and how much Bitcoin was sold in each cycle. And the highest cycle so far was the 2017 cycle. That was the one with the most turnover of Bitcoins. And then the 2021 top was a little bit lower. And we're kind of in between those already now. And we're barely starting this bull market. So there's a lot of Bitcoins that has been turned over at this point, and that's because of the supply zones. So I've been talking about supply zones quite a bit, but let me bring up the BTC euro, and you can see what I mean by supply zones. So this is 100K, and when it got up here, selling was unlocked. Okay, sell. And maybe this 24,000 Bitcoins, maybe it's a European person, and they're fine, I'll dump it at 100. Don't know. There's rumors that it's being transferred to ETH. I don't know what the tracking is on that, but that's the only thing that really makes sense. Why you would dump at this particular point, really, that many coins that you've held for that long. You bought into Tom Lee's marketing and his scamming to pump Ethereum. But anyways, okay, so that was a supply zone. And then if we go back to the dollar price, you can see we've had different supply zones. So right here was the old all-time high. This was the old all-time high, like supply zone. That took a while to get through. Then we had the 100K supply zone. And now this is the 100K euro supply zone that this is up here. So it just happens, it's measured both in dollars and euros, and this is the euro supply zone. But that's what we're talking about for all these coins changing hands. I mean, a lot of people might have had target of 100,000. At 100,000, I'm going to start moving my coins. I'm going to start selling them, and that makes total sense. But this dumping of 50,000 coins in 8 days, that doesn't really make sense to me. So, all right, let's see any comments from Telegram. Okay, Spag says, I met a guy from London here, and he said when he first got here, he couldn't believe that there wasn't stabbings every day. Oh, yeah. Well, Spag, you're in Canada, right? So you're saying a guy from London came to Canada and said he couldn't believe you don't have stabbings every day? I know, man. I wish we could have got into it with those guys, but I understand them not wanting to get politics, but at least get into macro. Come on now. Larry Jr. Most of the guests you've had so far have the paradigm that the government just turns on the money printer. Yeah, but that's most people, man. I'm so out of consensus with that view. I can't. I wouldn't be able to bring anybody on. I would just be able to bring like Jeff Schneider on. That's about it. Maybe George Gammon, but none of these Bitcoin treasury people. They're all inflationistas. Yeah, definitely. Thinking the government just spends money or prints money. And for new people that are watching, let's see how many people do we have. Okay, we got 11 viewers on YouTube. What's going on, guys? So if you're new to my stuff, the government doesn't print money. All right. I mean, how does the government fund its spending? Okay. It taxes people. So it spends tax money that it got directly from taxes, but it also borrows money. So it doesn't actually print money to spend it. It borrows that money. Where does that money come from? Is that money created when the people give it to the government? Is it created by the government? No, that's savings. That's money that's already out there. You could make the argument that some of these market makers will lend each other money to go buy treasuries, but that's not a very big thing. Okay, people buy treasuries from savings. So the government is not printing money when they spend. They're spending savings. That's what they're doing. They're spending savings. The Fed doesn't print money either, and we've gone back and forth on this. I know what's that term in law? Reasonable minds can disagree or something like that. But the Fed doesn't print money either. They create non-fungible tokens, and those are called reserves. And then those reserves sit on the balance sheet at the Fed for the banks, and they can swap them back and forth between each other, but really they don't do anything. They can also be converted into liquid cash, actually into dollar bills, paper bills. But paper bills are not, I mean, the amount of paper bills out doesn't really change all that often. I think it's something like let me Google it. I think it's 2 trillion in paper bills. American currency. Okay. How many paper dollars are there total value in the world? Approximately 2.3 trillion, almost 2.4 trillion in value of dollar bills out there. And that doesn't change very much. It's not like it goes up constantly, right? And so if you're saying that the Fed can print money because those non-fungible tokens can be turned into paper money, but the amount of paper money in the world doesn't change, so that's not really making any sense. So the Fed really doesn't print money either. So where does money printing come from? It comes from banking activity. Banks lending to other banks or banks lending to people. That's where the money creation comes from. All right. What was I talking about? DT says, didn't they just change some law allowing banks to buy more treasuries without reserves? That would be straight money printing. What do you mean there? I know that I think it was 2022 or 2021, they suspended the reserve requirement so that they do not have a reserve requirement right now. It's 0% fractional reserve or 100% fractional reserve, whichever way that should be said. But they don't have to have any reserves by law, but they have to pass stress tests. So that doesn't really make any sense. Like they don't have to have reserves, but they have to pass stress tests. So I don't know, but is it money printing, straight printing, swapping treasuries without reserves, buying treasuries without reserves? No, they go to the auctions and they buy the treasuries with money that they have. Like I said, there might be something to the idea that they lend each other money, but they wouldn't really do that. What they would do is they would do something in the repo market, probably, to get money to fund treasury purchases. But yeah, that's what I would say to that, DT. All right, guys, it's 5:00 on Friday. So if there's no more questions, we're going to bounce out for the day. Hope you guys have a great weekend. Get out there, touch grass. It is the rainy season here in Florida. So not a single day goes by without a downpour. But get out there, touch grass. Tell somebody you love that you love them this weekend. Spend time with friends and family. And hope you guys all the best. And I'll see you guys on the next one. Bye.